$7.8 billion. I guess when you have Eli Lilly money, you can literally buy a good night's sleep.
Not quite. $38 a share is cash, but $9 is tied up in a CVR. They're hedging.
Oh, come on. Contingent value rights are standard biopharma practice. It's still a monster premium for Centessa.
It means prove it works before we pay. But you're right, it completely flips the first quarter Megadeal narrative.
Exactly. Time to pull apart the rest of this term sheet. The rundown.
You look at the overall volume and it's flat. Totally flat. But private equity deal value is up 54%.
Because they're completely desperate to monetize. The LP pressure right now is insane. You have these massive piles of dry powder sitting there, and sponsors are finally realizing they actually have to buy and sell things to justify their fees.
Which explains Hahn Co offloading K-Car in South Korea, $830 million to a KG Group consortium.
Honestly, Hahn is probably thrilled to get that done. The mood for Korean bankers right now is incredibly grim. Geopolitical stress, macro headwinds, first quarter deal flow over there is basically a ghost town.
I'm curious about the antitrust scrutiny on that one, actually. K-Car is the country's largest used car platform. KG Group is going to have to navigate some serious regulatory filings before they can actually close this.
Speaking of navigating, Legrand is doubling down on data centers. They just picked up Keydak in China and TES in Europe, racks and power systems.
Everyone's trying to sell picks and shovels for the AI gold rush.
It's a great play, though. The software industry is in this total strategic arms race for AI capabilities, and Legrand is just quietly buying up the physical infrastructure you need to actually run the servers.
A great play? Nate, it's expensive and late. Keydak is a rack manufacturer. Buying a metal bending company and calling it an AI play because it's data center adjacent feels like peak cycle behavior.
Oh, come on. Power and cooling are the biggest bottlenecks in tech right now. TES solves actual European power constraints. It's a highly strategic roll-up.
We'll see what the multiples look like in the footnotes next quarter. I refuse to give them AI credit for metal shelves. Meanwhile, in wealth management, Count Limited is buying Oracle Group, $72.2 million.
That pushes Count's funds under advice to $42 billion. The wealth management consolidation machine just never sleeps.
Neither does Mountain Gate Capital. They just snapped up Upswell Marketing.
Tech-enabled direct response, pure location-based service growth play, classic private equity bolt-on.
Which brings us right back to the dry powder argument. But as active as the middle market is, the real story right now is the mega deals. Transactions over $5 billion are single-handedly propping up the global M&A numbers.
And the biggest one just dropped. Eli Lilly is throwing down nearly $8 billion for a sleep aid, and I have some serious thoughts about the structure of that payout. The big one, $7.8 billion for a sleep-wake disorder company. I mean, the irony is writing itself here. Entire floors of bankers literally losing sleep to close a mega deal about curing lost sleep.
You know, you used that exact same joke during the Jazz Pharma deal a few years ago, right?
Hey, I recycle my best material. But seriously, Eli Lilly is not messing around. This Centessa acquisition completely caps off a blistering first quarter for biopharma. We are looking at almost $46.8 billion deployed across the sector since January.
Wait, hold up. You are throwing around that $7.8 billion headline number like it is all guaranteed cash. I checked the filings. It is absolutely not.
Well, up to $7.8 billion.
Right. They are paying $38 a share in cash up front. The rest is a $9 contingent value, right? A CVR.
Which makes total sense. It is classic milestone structuring for biotech.
Is it? Or is it Eli Lilly inflating a massive headline number to look dominant while secretly hedging their bets? Centessa's sleep-wake pipeline is promising, sure, but it is not fully de-risked. CVRs are notoriously tricky. Historically, a huge chunk of them never actually pay out.
Oh, come on, Maya. You are being way too cynical. Lilly is buying a high potential asset in a fiercely competitive space. If Centessa hits their clinical milestones, the shareholders get paid. If the drug fails trials, Lilly does not hold the bag. That is just smart capital allocation.
It is smart for Lilly. It is a massive gamble for Centessa's retail shareholders who are suddenly holding a $9 lottery ticket instead of hard cash.
Fair enough. But look at the broader landscape. Mega deals over $5 billion are single-handedly carrying global M&A right now. Overall transaction volume is actually pretty muted. The big strategics are just swinging for the fences to move the needle.
Yeah, and private equity is definitely feeling the heat too. Sponsors are sitting on mountains of dry powder and their investors are screaming for returns. They are under immense pressure to monetize, which is why PE deal values are up 54% despite the low volume.
Exactly. Everyone is either buying AI software or buying biotech. It is an absolute strategic arms race right now.
Though I will say, the mood is not exactly champagne and caviar everywhere.
You were talking about Asia?
Specifically South Korea. US and European dealmakers are cheering this massive megadeal rebound, but Seoul is noticeably gloomy. Geopolitical and macro uncertainties have severely thinned out their first quarter deal flow. Local bankers are sweating.
Which makes Hahn Company's exit even more interesting. They are trying to offload K Car, the biggest used car platform over there, to a KG Group consortium for $830 million.
Right. And considering the local market anxiety and the antitrust scrutiny that deal is going to attract, we need to look closely at how they actually structured that buyout. Voices.
So the consensus from the analyst desks this week is basically that mega deals are saving the entire global market. Anything over $5 billion is single-handedly propping up the quarter.
Propping up the value, Nate, not the volume. The actual number of transactions is totally muted. It's a mirage. You have Eli Lilly dropping up to $7.8 billion on Centessa, and suddenly everyone acts like the M&A window is wide open.
A 54% jump in private equity deal value is not a mirage. That's real money. Sponsors are sitting on mountains of dry powder, and their LPs are screaming at them for returns. They're under massive pressure to monetize.
They're monetizing with gimmicks. Look at the Centessa footnotes. That $7.8 billion includes a $9 contingent value right. It's not all cash up front.
It's still $38 a share in hard cash. But fair enough. You want to talk muted? Look at South Korea. The mood over there is completely miserable right now.
Oh, it's gloomy. Geopolitics and macro uncertainty just wiped out their first quarter deal flow. Local bankers are basically just staring at their phones waiting for a catalyst.
Oh, come on, it's not totally dead. Hahn Company just inked a deal to sell K Car to the KG Group consortium for $830 million.
Wow, $830 million for a used car platform. Stop the presses.
Hey, it's the country's largest used car platform. People need sedans, Maya.
It's a local sponsor cashing out. Compare that to the software sector. Analysts are calling it a pure strategic arms race for AI capabilities. Legrand is literally buying up Chinese rack manufacturers and European power specialists just to feed the data center frenzy. Used cars don't move the global needle.
Fine, but I still think that K Car deal is going to face some serious antitrust scrutiny locally.
I actually agree with you on that. The regulatory filings on that takeover are going to be fascinating to watch.
We'll be tracking those filings closely, along with whether the rest of biopharma tries to match Eli Lilly's aggressive pace tomorrow. Spill the tea. I'm just picturing the contrast right now. You have bankers in New York and London literally popping champagne over this Q1 rebound, and then you look at Seoul.
Total ghost town. The geopolitical anxiety there is real. First quarter deal flow just completely evaporated.
Except for used cars, apparently.
Right. Hahn Co. finally offloading K Car to the KG Group consortium for $830 million.
Which is a solid exit. But you have to admit the optics are a little funny. The rest of the tech world is in this absolute blood sport over artificial intelligence, and South Korea's big catalyst is a second-hand Hyundai lot.
That's entirely unfair and you know it. K Car is the country's largest tech-enabled vehicle platform. It's not some guy in a plaid suit slapping the roof of a sedan.
Spoken like a true sell-side pitch deck.
I read the prospectus. But look, the broader narrative here is private equity just panicking. PE deal values are up 54% globally.
I wouldn't call it a panic. It's a massive deployment of dry powder. They're finally putting money to work because the macro environment stabilized.
Oh, come on. You don't actually believe that.
I absolutely do.
Nate, they're under immense pressure to monetize assets. Their LPs are screaming about the lack of distributions. It's not market stabilization, it's an eviction notice. They have to do deals or they can't raise their next fund.
Okay, fair. The sponsor to sponsor hot potato is definitely getting aggressive.
They're just passing assets back and forth to look busy.
Well, if you want to talk about buyers who are actually doing real strategic work, we need to look at the corporates. Megadeals over 5 billion are single-handedly holding up the global volume numbers right now.
And Big Pharma is leading the charge, paying an absolute fortune for a good night's sleep. Literally. Tomorrow's radar. Tomorrow, I'm tracking the antitrust filings on that K car deal. $830 million for a South Korean used car platform.
Finally, some movement over there. Local bankers have been miserable. First quarter deal flow was a total ghost town.
I'm not buying this as a real rebound. Hahn Company is selling to the KG Group, sure, but this reeks of private equity just desperate to monetize assets.
Oh, come on. PE deal values are up 54% globally. They're sitting on massive piles of dry powder and they have to deploy it.
Into used cars? While the rest of the market is in an AI arms race, Legrand is buying up data center infrastructure tomorrow.
Hey, someone has to drive to the data center. Besides, with Eli Lilly dropping 7.8 billion on a sleep disorder drug, maybe those exhausted Korean bankers can finally get some rest.
I doubt it. Speaking of bankers losing sleep, we need to look at who is advising that Oracle Group buyout.